Hello everyone and welcome to XNES's Market Outlook. In this video we're looking at a key idea for trading for the week ahead, together with the possible driver behind that, the main narrative, and what traders need to be aware of over the next few days of trading. My name is Michael Stark, Financial Content Manager at XNES, and the idea for this week is a possible sell for gold. When we look at the chart of gold, we can see that the price moved down relatively strongly after having tested the area around 1,870. It's moved down slightly below 1,850 and crucially below the 200-day moving average. It's possible that this movement might continue and the price might move lower, touching perhaps the main downward trend line from the higher timeframes. That's partially because fundamentals are on side, as we're about to discuss, and we can also see from technicals moving averages above the price, and the slow stochastic is close to the overbought zone. The key narrative that's driving this possible move down in the short term by gold is inflation combined with monetary policy. We've seen that last month inflation in the USA slowed slightly to 8.3% annually. That's a little bit below the high of 8.5% that was reached in March, but still not as much lower as had been expected. So there's still quite high inflationary pressure. This means that the Fed is still likely to tighten monetary policy quite aggressively. Adding to the hawkish picture for the Fed is a relatively strong non-farm payrolls release from last week, which total non-farm at 390,000 exceeded the expectations, which seems to support the impression that there will be more two-step hikes by the Fed. Looking at the economic calendar over the next few days, the most important release that's coming up this week is on Friday at 3:30 in the afternoon GMT. That's American CPI, or annual inflation non-core. The expectation for this is 8.3%, which is in line with the previous release covering the month of April. However, if there's a divergence or a significant divergence in the actual release from the consensus, we can probably expect that the technical picture for gold might change quite sharply and quite quickly, and volatility might go up significantly. So that's the key release traders need to monitor this week. Very important to establish good stops and targets around that time, and if possible, holding a trade over that period should mean a small trade if it's possible for you to do so. In summary, the key idea for a potential trade this week is a sell over the short term for gold. It's possible that the yellow metal might continue its decline towards the longer term downward trend line. The main narrative driving this is inflation combined with monetary policy. It seems that the Fed is going to continue its tightening, continue raising interest rates quite aggressively as a result of fairly strong job data last week, while the primary focus of traders and thing to be aware of this week is American inflation, which unusually takes place on Friday afternoon. If there's a divergence or significant divergence from the expected release, we could probably expect gold to move quite strongly. Thank you very much for having watched this Market Outlook from XNES, and we wish you successful and responsible trading.